Welcome to Real Estate Radio Live, an informative and engaging podcast discussing everything you need to know about the world of real estate. Your host, Joe Caccera, provides you with insight and guidance on how to buy, sell, finance, and invest in real estate. He also offers real estate tax management strategies, new construction advice, home improvement tips, and much, much more. And now, to guide you around the world of real estate, here's your host and Real Estate Radio Live team leader, Joe Caccera.
Welcome in, Joe Caccera with Real Estate Radio Live. Thank you for those that continue to follow us on Facebook. We appreciate that very much. We want to continue to grow the show as much as we can, and the way we do that is offer this on social media in terms of the live feed on Facebook. It gives us more viewership. However, it is a podcast. What we do is we record this in the studio. If you're watching this right now, we're recording in our studio. And that way, again, we can interact, get some feedback, and get the video portion of it. But this audio then becomes a podcast, and you could download that anywhere. We get thousands and thousands of downloads each month from this podcast. And we've been doing the show for a little over 8 years. Started with live radio and now doing podcasts just because it's a better reach. Gives people more flexibility. It's just really the better way to listen to content now for most people is on the podcast. The reasons, for obvious reasons, is that you could download it, listen to it when you want, at your convenience, go back, listen to past shows, do a lot of different things, and that helps very much. Just a reminder, the focus of the show is education and information. We talk about a variety of really content information for you, the consumer, that relates to real estate. Anything and everything real estate, that is the subtitle of the tagline of the show. However, we also do creative shows about startups. We've done some stuff with, as most of you know, if you've been following the show, with Jack Russo, who is the partner for Computer Law Group in Palo Alto. And Jack's part of their firm's expertise is they work with entrepreneurs and startups. We did a series last year on starting a new company, and then we're doing a series this year on growing a company. And there's a lot of interest in these types of shows because here we are in Silicon Valley. And let's face it, even though this is a real estate related show, it's all about the community, and people live and work in the community. And there's a lot of interest in general. So, all right, today I'm going to talk about a topic just out of coincidence. I've been in communications with a credit union on a regular basis here for some partnerships we're working on and talking about. But in general, I've brought this topic up before, but it's probably been a year or so it's a great time to kind of bring it up again. And the question is, what is better? What is better in terms of, for you, the consumer? Is it a bank or a credit union? Some of you may not have looked into it yet. Some of you may not have experienced it. Maybe some of you have always been with a bank, and you think, gosh, I don't know any different. Maybe some of you have been with a credit union, and you think, gosh, I don't know much different. So I'm going to go through the details, the stuff that I know in terms of, in general, the differences between a bank and a credit union for service, for checking accounts, savings accounts, the offers that they typically have. We'll talk a little bit about the comparisons of mortgages, home equity lines, credit cards. There's all kinds of things. In general, and for those that, it's interesting, for most people that have, in my experience, have been in credit unions for a long time, there's a real sense of ownership, there's a sense of relationship, there's a sense of community, there's a sense that they know the people that they go in and talk to on the phone. There's just, it seems to be a tighter connection in general overall with the employee, I should say, the member and the credit union in general. And when you compare it to the big banks, and let's just say as a comparison today, we're going to compare it to the likes of Wells Fargo, Chase, maybe Citibank, U.S. Bank, the 4 or 5 of the larger banking institutions to compare them against. And in general, to me, and we'll go through kind of piece by piece, we've done a lot of research and studies. Again, most of it's informal, not formal, but there's a lot of research you could gather online. So number one, what most people may or may not know, credit unions are nonprofit. So typically, the reason why that's important to them and their community and their members is because the profits, the money that they make in terms of the revenue that they generate, that goes right back to adding value to their membership, to their company, to their resources, to the people that provide those services and products and services to the membership community of these credit unions. So most of these credit unions, larger ones, have 60, 70, 80,000 members, and many of them have a variety of accounts with the credit unions, being checking accounts, savings accounts, credit card, and oftentimes mortgage, maybe home equity lines, and auto loans. Credit unions are known. I think sometimes in general, if people aren't used to credit unions, they may think of credit unions for auto loans. I know around this area there's a tendency to say, gosh, have you checked a credit union when it came to auto loans? Because they do have great rates and programs for automobile loans. However, if you dug deeper, you would find out that there are a lot of great benefits to being part of a credit union. And number one, the majority of them, the ones that typically have, I can't speak for all of them, but in general, if you sign up and you're a member, you have a free checking account, which means you don't pay monthly fees. And for some people, that may not be a big deal. For others, that may be. I think if you're just getting started in the kind of the banking world or life, and you're just getting out of college or you're going into college and you need to establish some checking account, a savings account, or credit union is a great place to do that. A lot of banks still charge monthly fees, believe it or not, for a basic checking account if you don't do a couple things. If you don't have an auto deposit, a lot of them will charge you a monthly fee. If you don't keep a certain balance, or if you don't say, I'm putting at least $5,000 a month through this account, a lot of them have different provisions of whether they charge you a fee or not. And so if you're just starting out, or if you're a person that doesn't run a lot of money through your account, that's very typical for a Wells or a B of A or a Chase or a U.S. Bank to charge monthly fees just for a checking account. And I'll tell you, let's go through, first we'll kind of run through the comparative programs and products when it comes to credit unions and banks. So the ones that they have in common, again, let's kind of run through them. The accounts and the programs, the types of programs and services, I should say, that the banks offer just as the credit unions do are the following: checking account, savings account, credit card accounts, mortgages, home equity lines of credit, auto loans, personal loans. Those things that I just described, pretty much both, whether you're in a bank or a credit union, they offer those products. Now you want to go through and kind of compare both on the product, service, and price side. So for the most part, they offer the same product. So I think you could check the box and say, okay, whether I'm with a credit union or a bank, probably in general they offer the same products. We just ran through them: checking, savings, credit card, auto loan, mortgage, HELOC, credit cards, those types of things. Okay. So we could check the box and say they're pretty equal when it comes to the products offered, comparatively speaking. Let's talk now about service, because to me, this is the bigger part of the equation. If we call it the three kind of prongs or three bullet points, we'll talk about comparative products, service, and then pricing and rates. Okay, kind of how that works price-wise. So let's talk a little bit about service, because to me this is the biggest component out of the three. And some people might argue, and that's fine too, I would have that debate with anybody or that conversation all day long about costs and fees associated with that. So in a day and age, unfortunately, where technology is taking over a lot of stuff, and again, there's this great side of technology. Don't get me wrong. I am a forward-thinking person. I love technology. I love innovation. I love the fact that I'm right in the middle of Silicon Valley. I've started a company myself. I mean, there's all kinds of reasons I'm excited about the evolution of technology, what it brings to the consumer in the hope of improved processes, systems, cost, evolution, and all those things. I love it. However, what's been lost in the evolution of technology, in my opinion, in many industries, is service. Service is damn right terrible in a lot of situations in companies right now. I'll give you examples which I think a lot of you will be familiar with. How many times have you guys called, or anybody listening to this podcast or viewing right now, and this one thing that really upsets me, how many times have you called, let's say, a phone carrier or a bank or anybody, let's just, you know what I'm talking about, and you get the damn menu that says, what are you calling for? And so you either have to voice it in or type it in, right? And then sometimes they could identify your voice, sometimes they can't, so you got to fight with that. And then when they say, okay, I've identified that you're calling about new service. What kind of new service? Are you an existing customer? Or are you a new customer? Or do you want to cancel your service? My point here is that sometimes it could take 15, 20 minutes, 30 minutes to get to a person, a live person that could actually pick up the phone and help you. What's frustrating to me as a consumer that I can't stand, and is really, really, really frustrating to me, is when I get on the phone and I just want to spend literally 30 seconds asking someone a simple question because it may be a little complicated, and I don't want to go through 18 variations of dials, punches, and different keystrokes just to finally get to a person. And then sometimes you can't even get to a person. I know a lot of the younger generation in general, and I'm going to speak in general terms, not overall, would rather not speak to people. They would rather use text, emails, and I get that. But I think there's a component of where that communication is perfect. I like that too. Matter of fact, in many cases, I don't need to speak to someone if I'm communicating via text or email. But when you have a problem, or when you have a question that's pressing that you want an answer to, and you want a confident answer, it's typically not done through automation. I mean, sometimes it is. Like if you want to check your account, right? We all know that. Fine, you could check your account. You don't need a person for that. If you want to listen to products and services, you don't need a person for that. If you want to listen to where their location is, how to contact them, what the address is, we get it. All of that stuff, it's great that technology could chime in and you could do voice services and you could get all this. But if you want to ask a simple question, instead of spending 30 minutes or 45 minutes on a phone or trying to email, I mean, has anybody ever tried to contact Facebook? I'm listening to Kyle's sitting over here doing the show. I mean, if anybody ever tried to contact Facebook, forget it. I'm not sure there's ever even any living human beings that ever pick up the phone on Facebook. I know, I get it. The concept is that they'd rather communicate, via text, via messaging, I get all that. But sometimes you just want to talk to a person. And that, to me, is the most frustrating thing in today's business world and evolution of technology and people trying to cut costs and do away with the human element, is that every once in a while you just want to talk to a person even for a minute or so. It's really frustrating. So I know it's not just me. It's millions of people out there experience the same thing. The reason I take you kind of through this guided path here, if you will, as I converse versus bank versus credit unions, is that banking in general has lousy customer service. And this is coming from a person who works in a mortgage banking industry and has for the last 18, 19 years. So believe me, if anybody understands the banking industry, now there is a difference between a publicly held company like Wells Fargo, Chase, B of A, Wells, all them, U.S. Bank, total different than a mortgage banking operation that just do mortgages. But right now we're comparing the major banks to some of the top-seeded credit unions. So the reason I'm spending some time on service and kind of painting this picture of how frustrating it is that the banks, in my opinion, and it's not just my opinion, if you look up J.D. Power, if you look up customer care, if you look up the highest and lowest rated industries in terms of customer care, I can tell you right now, typically the bottom of the list is banks. The banks are typically, in general, year after year, rated some of the lowest industries or businesses as far as customer care, customer service in any category. It's usually not good. They're usually very bad. And what's interesting is there's really not a category in some cases year after year. Maybe there is. There probably is something out there. I'm sure there is. But, when someone's shopping for an interest rate, let's say on a mortgage or a credit card or a home equity line of credit, that's really easy to do online, right? You kind of punch the numbers, you go to these different places, you look and see who's offering, you compare them. There's places that'll do comparative analysis for you. But here's what you can't get online. You can't get a comparative analysis of who has the best service and who you can communicate with and actually get some answers and have someone that shows care. This, ladies and gentlemen, is where I think the credit unions win over the banks all day and all night is with service. This is the area that to me is clear cut across the board. If we're looking at the three categories, like when I started the show, I started the three categories when we're comparing credit unions and banks to what are the products and services they offer. But I think you would agree that they all offer pretty much the same. Okay. The second one is service. Who offers better service across the board? And the third one, what we'll get into, is pricing and costs and fees. Who does a better job at offering these products like mortgages, credit cards, home equity lines, auto loans? Who does a better job in terms of the rates and fees that they charge for these programs? So right now we're talking about service still. So hands down, and it's not just my opinion across the board, if you do some research, the service element of the banking business is a lot better, 100 times better in credit unions than it is in the banks in general. Now, if you're comparing it to private banks, it's different. And a couple of private banks around here, Heritage Bank, First Republic, there's a couple others that don't come to mind right off the top of my head. So this is different because a lot of these private banks now, they'll kind of categorize themselves as relationship banking, just kind of as credit unions do. But banks could say relationship all they want. But I could tell you right now, unless you have $1 million or more invested with the banks, like a Wells Fargo, a Chase, or B of A, or U.S. Bank, you're going to be lucky to get a service rating in 3 or better, and 10 being the best. Service is terrible. So you might ask, why is service so bad? Well, service is so bad is because, for the most part, as much as they preach and talk about service and care, major banks are really mostly cared about the bottom line, and they don't tie service and customer satisfaction, unfortunately, they don't tie that to profits. They tie profits to productivity, how they could keep labor costs down, and how they could keep overhead down. And the way they do that, unfortunately, is hire people that are less educated and less trainable, and then there's a lot of turnover. There just is. Now, this is not to knock the banks. There's a lot of industries that have problems with this. This is to do a comparison today, as we're doing, as the credit unions versus the big banks. So I could tell you, if you're out there, if you're watching this podcast as we show it in our studio, or later on if you download and you're listening to this podcast, I could tell you hands down, if you're looking for a place that's going to provide better service, pick up the phone actually when you want to talk to someone, walk into a place and talk to someone that's friendly and that probably even might know you. Credit union's the best bet for that. Best bet for that, hands down. So let's real quickly go over it again. Products and services, they all offer the same. Number 2 of the 3 is service. In my opinion, and not just mine, do your own research. Service is hands down better at a credit union than is at banks. So let's spend some time now on rates, fees, costs associated with this program. So kind of across the board, I'm not going to go into detail at every single one, but if we start at checking and savings, I could tell you in general that checking and savings accounts are going to be better at a credit union than they are in a bank, in general. Banks have a tendency to have the little caveats on free checking account to begin with. So again, as I mentioned earlier in the show, typically to get a free checking account at a bank, you either have to have a certain amount of money in the account, a certain amount of money running through the account each month, or you have to have auto deposit or some other factors or criteria built in order to get a free checking account. That is not the case with credit unions. In general, for the most part, if you sign up and you become a member, the checking account and savings accounts are free, and the rates do vary. And when I say the rates on savings accounts, you'd have to go out and check those, but I could tell you they're very comparative. They're not going to be major differences at all in savings rates, I could tell you right now, in savings accounts with banks and credit unions. Credit unions are going to be a little bit better in general across the board. I think that's what history will tell us. And when you do your research, and by the way, it's great that people listen to the show, and I get a lot of feedback. I get calls and emails from people about, thanking me about information or doing some due diligence and sharing it with them. But I would always say, no matter what show you listen to, whether it's this or another one or whatever topic, always do your own due diligence and your own research before making a decision. The reason why service, let me bounce back to service just for a minute because I don't want to miss this important point. The reason why service is so much more important to me, and I think most people would admit to this, in an industry like financial services or when you're dealing with finances, is because it's money and it's important and you don't want to lose money and you don't want to make decisions that are going to affect your money or make problems with your money or lose money, right? It's one thing to say, oh gosh, I'm going to go buy an iPhone, or I'm going to buy a laptop, or I'm going to buy a TV, right? I'm going to buy a blender. That's fine. Okay. Go out, do your due diligence, purchase it, fine. Okay, we're good. It's another thing, and follow me here, please, to have a relationship with a bank or credit union. These are a group of people that are managing your money, responsible for your checking account, responsible for your savings, responsible for the credit cards, responsible for the mortgages. So I would argue that service is one of the most important components to look at when you're looking to choose a credit union or a bank. Service has to be one of the most important things you think about. And this is the reason. A checking account you use every day. You use every month. This is your money. This is your hard-earned money, your assets, your business money that goes through these accounts. You want someone that's going to provide a level of service that when you pick up the phone or you walk in, they're going to care about what you are and what's your account, and take care of you. You're going to get that at a credit union than you are more often than you will a bank. And again, this is not to say that there's some people out there listening to this and say, I love B of A, I love Wells Fargo, I've been with them for years. That's fine. I'm not saying that every single bank or situation is going to be sour with the major banks, but the majority of them are. And I have personal experience with both, so I could draw a lot of personal experience from this. And so from personal experience, I could tell you that the bigger banks are very problematic. Service is terrible. I'm not sure if most of you remember, but Wells Fargo hasn't been in the news lately, but for years they were in the news for fraudulent activity when they were signing people up for fake accounts and these other activities that were going on. I'm sure most of you remember that. I was part of that personally at the time. I was one of those people that they signed up a phony account for. I'm not going to go into detail here, but didn't feel very good. Didn't make me feel very, very good about a relationship for that many years with the bank. So service should be a big, big component of what you do and what you look for when you choose a credit union versus a bank. And I just say that when you're looking about this, make a decision. I hope you do, and make sure you kind of make it based on who might provide you with the best service, because there are times when you want answers. Okay, so let's jump back and talk about rates and fees. Again, I think you're going to find a major difference. Checking account with banks are very tricky. They're going to charge you unless, in general, you have money to move in and out of the bank accounts. If auto deposit, direct deposit, those types of things, then they're probably going to charge you. So be careful of that. Savings account could be the same. The rates, take a look at them. Typically, rates at credit unions are better. Credit cards, let's talk a little bit about that. Credit cards are all over the board. So I'm not going to go into major detail other than say this. You're going to get comparative rates and benefits with credit cards at credit unions than you are banks. Those are pretty similar. The difference, again, I'll keep coming back and I'll flip the page back and forth here because it's important. The difference is if you have a question, if you want to change the card, if there's a problem with the card, anything to do with what you need, the service is going to be better in communication with a credit union than is at a bank. All right, mortgages. What about mortgages? Financing a home, whether it's a primary residence, second home, vacation home, rental property, doesn't matter. So credit unions and banks all do mortgages. Some of the credit unions don't do so much FHA and government. They do a lot of what they call portfolio. They do more relationship lending so that they take very good care of the customers in terms of keeping that loan and servicing that loan. So most of the credit unions will service the majority, or if not all, of their loans. They'll sell some for capital, like most do, but in some cases they'll keep them, try to service them. Banks don't do that. I could tell you in general, banks sell loans all the time. And again, this is not a bad thing, just something you need to know. Once they sell your loan, it could be to another investor, it could be to another bank, it could be another servicing company. So that's something to think about. And I could just tell you in general, when your loan's being serviced by someone that's being contracted out and doesn't really care about who originated that loan and where that relationship started, it is completely different to have a mortgage with a credit union than it is a bank. It just is in general. Now, some banks, when it comes to the jumbo financing, they will keep that mortgage. They will service that mortgage. That could be the same, and that could be the case with both. But in general, I would mark the credit unions overall better in interest rate, especially when it comes to do with the jumbo financing or portfolio loans that they do. Now, some of the big banks, if they want, they have the ability, let's face it, because they have market share, they have the ability to put specials on and buy the market, we call, and drop the rates on certain programs. And when they do that, there's not much we could do to compete. Anybody compete with that. But that happens from time to time because they're so big. Home equity lines of credit, that's another product that both banks and credit unions offer. And so, again, I would do the comparative shopping around that. It's been my experience that the credit unions will, for the most part, offer better programs and rates on home equity lines of credit. There's a lot of innovation there that takes place. I could also tell you that as an employee or a company owner or a company or part of a company where the credit unions do a great job, and most banks don't do this in general, as that is, if you have a relationship with a large company, credit unions and banks sometimes have relationships, typically credit unions do, and they'll have relationships. That's where this whole thing, if you think about it, credit unions kind of were born out of partnering with a company, and then their employees have become members. And the minute the employees sign up, I remember years ago when I was in the airline industry, when I was with Western and Delta Airlines, they had Western Airlines, Delta Airlines credit union. And it was primarily made up of for the airlines because we had over 60,000 employees. So it made sense. So there was a credit union for Delta Airlines. And there still is. The reason I bring this up is that the relationship with the credit union and the employers and the employees is a lot different than the relationship with the bank. Most banks have zero relationships with companies and employees. Most credit unions, on the other hand, have tighter relationships. Again, I'll use in this area with the Apples of the world, Google's, Intel, Cisco, Microsoft, different companies like that. A lot of credit unions have intimate relationships with companies and their employees because of that relationship that's been established. And why do you think they do that typically with credit unions? Why do you think a company has a tendency to develop that relationship and trust the credit union more than they do the banks? For the reasons I'm talking about right now, because they want to be able to offer a level of service, but also be competitive with rates and programs and the things that are being offered. So in general, that's kind of a summary of the three things that I would say keep an eye on and look when you're assessing, when you're deciding what to use, either a credit union or a bank. In general, my take would be credit unions, in general. If you're going to do it, if you're thinking about it, if you haven't started an account, if you want to compare them, I would do your due diligence, take your time. My recommendation would be credit unions overall, in general. Now, some people might say, well, I have a certain amount of money invested in Wells Fargo or Chase, and this is why I do this. So I know there's different situations where a person, it might not make sense for them. The last thing I'll say about this before I sign off today with this particular topic is do a comparison on the ethical business practices. And you might say, what do you mean by that, Joe? Do a little research. Do a little research, and this is more than just a coincidence, that you will find the corruption, the unethical practices, the gouging, the shady deals, the foreclosure issues. If you look at all the problems that banking and mortgages has had over the last 20, 30, 40 years, you know where 95% of those problems came from? Big banks. What do I mean by that? What I mean by that is that big banks have caused the problem. They were the problem for the meltdown. Most people would say, well, wait a minute, didn't consumers apply for loans that they couldn't qualify for or they shouldn't have had? Yes. But, ladies and gentlemen, guess who offered those products? I did many topics back in the day about this one, and nothing frustrated me more to hear people, the consumers, in some of these small mortgage companies and banks, the mortgage brokers took the brunt of it. Nothing was more frustrated to me than hear about the mortgage meltdown. Looked at what was caused. You know who caused that? Big banks caused that. They offered the programs that allow people to borrow money with no job, no credit, no down payment. Consumers didn't come up with those programs. Consumers took the programs because most people would. I'm not saying it's right. Banks came up with those. Banks came up with those programs. My point here is over the history, you'll see that all the problems, the majority of the problems, ethically, financially, have come from banks making decisions that cause problems within the consumer, or a lot of issues that you'll see with lawsuits and problems. Ethically, my point is this as I leave today. Ethically make a decision who you want to work with. I know there's some people out here, I've had this conversation before. It doesn't matter because I have a strong feeling about this. Ethically, to me, are you a person that's willing to do business with a company knowing that they have these practices on a regular basis, but yet you say, hey, listen, Joe, hey, let me tell you, I got an interest rate better at Bank A than at the credit union. It saved me, $56 a month. You know what? And the bottom line is I want to save money. And I would say, good, that's your choice. But I wouldn't do it. And I know a lot of other people wouldn't. And this is not a right or wrong conversation. It's just who you want to do business with. Do you want to do business with someone that you turned a blind eye to how they treat consumers, how they treat minorities? And by the way, this is just not me saying this. This is proof and this is data that you could go collect. There are big banks out there that rip people off on a regular basis, overcharge, they gouge, they redline. Go do some research if you want. I'm not going to name the names because it's not good. I could tell you it's majority of the banks, and there's one or two that's in the news all the time for doing this, and it's a couple of the biggest banks. You'll know those brand names. So the question is, do you turn a blind eye to that? And do you say, well, everybody makes mistakes, but, I've been with them for 20 years, and I saved $50 on my loan, so I think I'm going to stick with them. It's up to you. All I'm saying is keep this in mind when you go to make your decisions. If this stuff matters to you, if it matters to you, just along the same lines, look how many people have changed their buying habits based on the big green movement, right? Look how many people don't buy water bottles anymore. Look how many people do a lot of stuff to save the sea and the environment and the air, which is wonderful, right? Look at your spending habits and what you've done to change when it comes to doing what's right for the green part of the company, right? The global, what have you done for the good? There's millions and millions of people that have changed their buying habits to go more green and to do what ecologically is better for the world. It saves water, ocean, air, all these things, right? Animals, we could go on. And that's wonderful. Look at the big shift that's taken place. Look at the amount of money and people that have changed their spending habits based on doing what's right for the environment, for water, for air, for all that, right? Look at the adjustments. What I would say is try to look at the same thing in terms of who you want to do business with, the way they do it right, and the way they treat people over the years. The only way you could send a message is with your money and who you decide to do business with. And so I would say as you sit here today, if you're watching the show or you're listening to the show, and whether you currently have a banking relationship with a bank, or you do or you don't, or you're about ready to establish, or you're getting kind of frustrated, in general, you should just go out and look. Test some credit unions out. One of the great ones around here is Key Point Credit Union. Give them a try. Call them up. Walk in. Ask questions. There's a lot of different things you could do. And by the way, we also love to support community credit unions around here as well. It's part of what we do. So what I would say as I end the show today, this is your money. you decide how you want to spend it, but you also decide on who wants to help you with your money and who's going to help you preserve your money and help you make wise financial decisions. So as you're gathering that information, do your due diligence, and hopefully you make the right decision that's good for you, your family, your partner, whoever it is. And as always, if you have questions for me, and I do get emails and calls, shoot me an email, text. You know where to get me on email. Go to RERL-1663.com. You can email me there. If you want to text, it's 408-838-9060. You can shoot me a quick text. I get those. Any questions you have about this or any other topic, I'm here to help. Thanks again for tuning in today. This is Joe Kuchera with Real Estate Radio Live. Take care. Have a great afternoon.
You've been listening to Real Estate Radio Live. For more information on today's program, visit RERadiolive.com. That's RERadiolive.com. Subscribe to our podcast. Discover more at RERadiolive.com.